Hello and welcome to Nutmeg's Investor Update for March. I'm Katie Prinky-English, the Chief Marketing Officer at Nutmeg, and as always, I'm joined by Shaun Port, our Chief Investment Officer. Hi, Shaun.
Hi, Katie.
Can you tell us what's been going on in the markets over the past month?
Well, the markets are still quite buoyant, expecting Donald Trump and his administration to deliver some tax cuts down the road, maybe later this year, maybe even into next year. So the markets are quite excited about that. Also, on the other side, the French elections have really raised the political risk in Europe at the moment. So people have been buying bonds in Europe as a sort of a hedge, if you like, a defensive play against what could happen in France. And we're seeing lots of news about the French elections really moving markets. So quite a lot of opposing forces, but generally markets have been really quite buoyant.
And how have Nutmeg portfolios performed?
Well, February was a really good month for Nutmeg portfolios. We saw medium risk portfolios deliver 2 to 3%, and our highest risk portfolios delivered up to 3.7%. In a context where the UK delivered about 3%, that was a really good month.
What changes have you made to portfolios, and do you have plans to make changes in the future?
Well, we've added some more emerging market stocks to portfolios. We're getting more excited that the global recovery is becoming more synchronized, trade is improving, which is generally really positive for emerging markets. We've been selling our holdings in small companies in the US. We think they've got a bit far ahead of themselves given the sort of Donald Trump trade, and we've reduced those holdings. We've also been moving into what we're known as inflation-linked bonds. So these are bonds that have a payment linked to how far inflation moves up. And we think given that global growth is improving, particularly in the US, it's a good time to own inflation-linked bonds in the US at the moment.
And we had the budget this week. Anything of note for investors?
Yes, on Wednesday, the Chancellor had one thing. Unfortunately, it was bad news. It said that the dividend tax allowance was going down from £5,000 to £2,000. And really what that means is that you should guarantee that you're using your ISA allowance every year to shield your income from tax.
And we had a few customers who asked a similar question, which is, with markets and equities especially having had a good run recently, how will Nutmeg lock in capital growth?
Katie, that's a really good question. It's a really interesting topic at the moment because markets have had a good run, good start to the year. Unfortunately, markets are not very predictable. We know that sometimes the markets are completely flat for a year. Nothing really happens. You may pick up a yield of 2 to 3%, but not much more than that. At the moment, markets have had a really good run. But it's important not to try and time the market. Just because markets have had a good run, it doesn't mean they're going to have a bad run in the future. We think the prospects are reasonably good with the global growth starting to become more synchronized and generally quite a positive environment. So we wouldn't try and time the market. That said, we're still thinking about risk in our portfolios. If we think markets have gone too far and there's too much risk in portfolios, we'll start to dial down that risk. But at the moment, we're really happy with the way markets are performing.
Great. And Shaun, my last question for you. With the end of tax year approaching on the 5th of April, do you have any tips for our investors for how they can make the most of their annual ISA allowance?
You don't get many things for free in this life, so I think it's really important to use your ISA allowance. So use it or lose it. You have £15,240 allowance ending this tax year and $20,000 starting the new year. So it's a really good idea to use your allowance this year, and if you can, to start saving early in the new tax year.
Shaun, thanks very much.
Thank you, Katie.
And thank you very much for joining us. This month, as we're coming to the close of financial year, we are extending our hours to make sure that we help you make the most of your ISA allowance. So please visit our support section on our website. We will be opening earlier. We'll be extending our hours later into the evening, and we'll be available on weekends to make sure that we're helping you with any questions you may have. And as always, if you have questions for us, please feel free to reach out via our Twitter handle, via our Facebook page, or via email. And we look forward to joining you again next month. Thanks very much.